I have good news and bad news for you. The bad news is that most of your ancestors are dead and gone. The good news, however, is that there's a company out there that believes that your ancestors hold the secrets to your healthcare and the cures and treatments to most, if not all, human diseases. And that company wants to help you discover your ancestry in exchange for your help in understanding and solving human healthcare. I'm Lincoln with boacademy.org, and today I want to talk to you about Virgin Group's Acquisition Corporation that is taking 23andMe public. The company says 23andMe offers a personalized health and wellness experience and has built a premier genetic database to unlock insights including potential therapeutic treatments for disease. The transaction will provide the capital to fund additional investment in key growth initiatives across 23andMe's consumer health and therapeutics businesses. This merger, which gives 23andMe an enterprise value of $3.5 billion, is expected to close in Q2 of 2021. The CEO and co-founder Ann Wojcicki and Virgin Group's Richard Branson are each investing $25 million into the $250 million PIPE deal. That's private investment in public equities, which will help this deal complete. And if you don't know what a PIPE is, we've covered that in previous videos, so go check that out. Once this merger is complete, the combined company will have $900 million in cash balance, which is great because the company won't need a lot of money to achieve their goals. As for the equity in the company, there will be 444.8 million shares outstanding, of which Virgin Group Acquisition Corporation's shareholders will account for 11%, and 81% of those shares will be retained by existing 23andMe shareholders. The merged company's stock ticker will be ME, M-E, once the merger is complete. In this video, I want to walk you through the problems that this company is trying to solve, their proposed solutions, the financials, the advantages of the company, and what my thoughts are on the investment opportunity here. There's a whole lot to walk through here because this company is exciting and they have great plans for the future. But before we get into all of that, I want to ask you a quick favor. These videos take a long time to put together and they take lots of research to make sure that everything's accurate for all of you. So if you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on 23andMe and Virgin Group's merger. And of course, if you want to help the channel grow and reach more investors, get more access to me, and get direct answers to your investment questions, then join us over at patreon.boacademy.org. That's where we share knowledge and discuss the stocks and SPACs that we're all investing in to help one another grow our wealth together. We collaborate on research, share news and rumors so that we can all do our diligence and get in on deals before everyone else finds out on YouTube and elsewhere. And that's where I share my early research into companies that I'm becoming more bullish on and companies that our patrons are interested in, just like 23andMe and SBE and CCIV, which we got in early on when the rumors first started. And you've seen how fast that has grown. So if you're interested in all of that, join us over at patreon.boacademy.org. Now let's hop in. Let's start with the problems that 23andMe believes exist in the world and how they plan to solve it. First, the two problems. Healthcare isn't personal and not targeted enough, which leads to reactionary care rather than solutions that prevent the diseases in the first place. The result of this reactionary system is that more people than necessary suffer from undiagnosed diseases. People fail to catch cancer early and then are mistreated in the healthcare system due to lack of understanding of their specific health history and needs. And the second problem is that we don't have enough data to understand the human genome, so we develop inadequate and impersonal health treatments. And along with that, our systems are incredibly slow at identifying new targets for drugs, and then they struggle to actually get those drugs approved by the FDA. Ann Wojcicki, the CEO and co-founder of 23andMe, says, as we approach the next phase of our business, which will create new opportunities to revolutionize personalized healthcare and medicine, we have always believed that healthcare needs to be driven by the consumer, and we have a huge opportunity to help personalize the entire experience at scale, allowing individuals to be more proactive about their healthcare and wellness. Through a genetics-based approach, we fundamentally believe we can transform the continuum of healthcare. That's a bold statement by the CEO, and it's quite exciting what she's saying here. She's saying that our healthcare system is not personalized enough and is not data-driven enough. And all of that leaves a big gap for a company to come in to solve those two problems. And she believes that 23andMe can be that company. So what are the solutions? Number one is that 23andMe will give customers the ability to understand their ancestry and use this as a means to gather data about the unique health histories of their customers. Using that data, 23andMe will help their customers seek and qualify for preventative health care. And the company has already started doing this. they have case studies of them showing their customers their ancestry and their healthcare risk and helping them get into clinical trials that they needed to be in. Because without 23andMe, they had no way of showing that they were at risk. With the help of 23andMe, they had the hard data to show that they were at risk and that they should be in the clinical trials and get early access to treatment. Next, with their vast genetic database, 23andMe will unlock insights into human health in order to produce unique and targeted therapeutics to treat human diseases at consumer product level scale. Lastly, 23andMe will give their customers the ability to subscribe to personalized healthcare services once their customers have engaged with their ancestry and research products. So how all of this works is that as a customer, you go into 23andMe, you get your ancestry DNA test, and with all of that information that the company can gather from your DNA results, they can help you identify your health risk. And if you're like most of their customers, you will opt into their research offering to help them study and identify more targets for therapeutic treatments. Next, let's talk about the company's advantages over their competition. 23andMe has the data needed to accomplish their goals thanks to their popular and leading ancestry product, which most other companies in therapeutics research do not have on their side. The vast majority of their ancestry customers opt into their research, which enables them to gather more genetic data to help them discover more drug targets and acquire FDA authorizations faster and more efficiently than other companies. The company is already showing and expecting accelerated drug target discoveries and validations. Using their unique genetics database for research, they discovered 2 drug targets in 2019. Then they projected 8 in 2020, and between 2021 and 2022, they expect that number to grow by 28% to 25 new targets. By 2024, they are expected to discover 37 drug targets. And thanks to the company's unique dataset, they have also been able to partner with GlaxoSmithKline, GSK, a leading multinational pharmaceutical company, to research and produce more targeted drugs. The deal consists of $300 million in equity investment from GSK and a 50-50 profit sharing agreement. So this deal is mutually beneficial because GSK can benefit from the data that 23andMe has, and 23andMe can benefit from GSK's platforms and technologies. 23andMe's customer acquisition costs are very low thanks to their ancestry product and genetics research offerings. This will enable the company to rapidly grow their subscriptions for their consumer platform. Ultimately, this leads to higher profit margins. The company already sees this playing out with margins as high as 45% in 2020, expected to grow to 58% by 2024 if all goes as planned. 45% margins is very intriguing, but to get to 58%, that's exciting. And if this company can actually reach their projections, they will have a chance at being profitable within the decade. And if they can continue to do this, they will be a very profitable company in the healthcare space going forward in the next decade or two. Next up, the financials before we talk about whether or not I will invest. Richard Branson, the founder of Virgin Group, says, of the hundreds of companies we reviewed for our SPAC, 23andMe stands head and shoulders above the rest. As an early investor, I have seen 23andMe develop into a company with enormous growth potential. Driven by Ann's vision to empower consumers, and with our support, I'm excited to see 23andMe make a positive difference to many more people's lives. So 23andMe's revenues took a steep decline in 2020 and is expected to stay below their 2019 mark of $441 million through 2024. This isn't great, but as we covered before, the company's already high margins are growing steadily from 44% in 2019 to an expected 58% in 2024, 3 years from now. This is very good news for investors who are excited about the company's long-term future. If they can continue to drive up margins by lowering their operating costs, this company, like I said before, will be increasingly viable in the future. And as an investor, this is great news for you. Nonetheless, while the company expects their consumer and research services to turn a profit of $26 million by 2023 and $71 million by 2024, they expect the overall company to still be adjusted EBITDA negative of $109 million and $78 million in 2023 and 2024 respectively. This all means that while the company has a bright future, long-term future, they will not be profitable for the foreseeable future. That's between now and 2024. So with all of that said, will I be investing? Well, yes and no. I believe that 23andMe will be very instrumental to the genomics-led healthcare revolution that we're all going through right now and that we're in the early stage of. And I believe in the future of that industry. So 23andMe has great margins. They have a consumer subscription service that their consumers are showing great interest in early on, and they have incredibly low customer acquisition costs that continues to decline. And it's a great time to be a company in this industry. So for those reasons, this is a company that I definitely want to hold for the long term. And why I believe that 23andMe will be incredibly more valuable over the long term, I don't like the company in the midterm. Over the next 4 years, I believe that there's better places for me to put my money while the company tries to figure out how they can become profitable. So for now, I will be investing in 23andMe. I have them in my passive future tech portfolio, which is much smaller than my growth portfolio. But right now, they are not in my growth portfolio because, again, I have better places to put my money right now, and I'm trying to be very concentrated in my investments. This deal is expected to close in Q2 of 2021, and at that time, 23andMe will trade on the New York Stock Exchange as ME, M-E. But for now, if you want to invest in the future of this company, you can do so by investing in the SPAC, VGAC, on the stock market. That's Virgin Group Acquisition Corporation. And if you want more information on this deal, I've linked all of my sources below, including the deck and the press release by Virgin Group. So again, I hope you enjoyed this video. If you did, do me a quick favor. Like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on Virgin Group and 23andMe's merger, and whether or not you're going to invest, and if you're already invested in this deal. And of course, if you want to help the channel grow and reach more investors, get more access to me, and get direct answers to your investment questions, then join us over at patreon.boacademy.org. That's where we share knowledge and discuss the stocks and SPACs that we're all invested in to help one another grow our wealth together. We collaborate on research, share news and rumors so that we can all do our diligence and get in on deals before everyone else finds out on YouTube and elsewhere. So if you're interested in all of that, join us over at patreon.boacademy.org. I'm Lincoln with boacademy.org. Thank you again and have a great day.